All right, it's time to talk fractionalized assets and how they are set to revolutionize the world of finance. I'm Mike Loader and this is Crypto Corner. Hello and welcome back to Crypto Corner, presented by the team at BTC Markets, where each episode we go about detailing the crypto market trends that are changing the game. Okay, it's time to explore the game-changing potential of fractionalized assets across a range of classes, including cash, properties, commodities, venture capital, private debts, and bonds to unlock the future of real-world asset tokenization. Joining me now to outline a lot more about what all of that means is Caroline Bowler, CEO at BTC Markets. Thank you so much for joining me in studio once again.
Thanks very much for having me.
So what exactly are we talking about today when I list off all those real-world assets and how they relate to this space?
Yeah, so it's not actually the assets themselves that are getting sliced and diced, it's the ownership of those assets. And it's applying blockchain technology, which enables that tokenization process to happen, that slicing and dicing up the ownership into little tokens that can then be traded individually or part of a wider fund.
Okay, and you've brought in a special guest, as you do, to speak about this. Can you tell us a little bit about them before we bring them in?
Yes, absolutely. This next up is Lisa Wade, who's the CEO of DigitalX, who are the #1 and #3 best performing funds in Australia in 2023.
Well, let's bring her in. It's good to see you. Thanks for joining us on the program.
Thanks for having me.
No worries at all. So let's start off a little bit about DigitalX's Bitcoin funds. Caroline, you wanted to ask a specific question. You were very excited to get into this.
Yeah, absolutely. It's such a privilege to have somebody with such talent and capability on the show. As I said at the top, #1 and #3 best performing fund in Australia last year. What do you think are the factors behind the success of those two funds in particular?
Oh, look, so we have two funds that outperformed. We do have three funds in the business. I'll talk about the third one after. The two outperforming funds were the Bitcoin fund and the crypto fund. So the Bitcoin fund is a wholesale investment unit trust that owns Bitcoin and Bitcoin only, and then the crypto fund owns a basket of crypto inside of the top 20. And needless to say, we kind of blitzed the returns. The Bitcoin fund was over 150% and the crypto fund was 111% thereabouts. So super great returns. There was a bit of a tailwind in 2023, and we do need to acknowledge we had a headwind in 2022. But there was a big shift in the sentiment in our market, which is super important to acknowledge. And the shift that we see at DigitalX is that we went from crypto being a nascent market that is a bit of a sort of something that investors are doing off the side of their desks and in their personal portfolios, to this real institutional shift where we've seen a number of institutions move into the space, and that's really altered the supply-demand dynamics in the market. So there's real fundamentals that sit below the outperformance that we had, and we think a great setup for another year of outperformance this year and on into the future. So Bitcoin is what we see it as is new financial rails for money and how money is valued and how general assets are transacted compared to, say, the Australian dollar as a reserve currency. It's sort of like a new world reserve currency. And crypto and that universe is really the infrastructure that sits underneath what we call Web3 financial rails and the building of that new financial infrastructure. And we heard Steve Vallis talking earlier before about how younger generations and people in developing nations have completely transformed the way they transact financially. And as that becomes more mainstream, there are supernormal investment returns to be made from investing in that underlying thematic, which is what our crypto fund does.
Very, very well said. Lisa, talk to us a little bit about Bitcoin's halving and, of course, that scarcity we continue to see, just for those out there who are curious.
Yeah, well, we were having a laugh before. The Bitcoin halving is actually going to be on my birthday at the latest calculation, which is the 22nd of April, which is also Earth Day. And we can step into the environmental conversation around Bitcoin in a moment if people want to. But the important thing for the market is this supply-demand dynamic. And what we've seen is a big wave of demand coming from that institutional interest. So we've had the likes of BlackRock, Fidelity, Fidelity, and a number of other funds come into via the ETF market in the US, which the average daily volume of demand is 12,700 Bitcoin per day. You may never remember that number, but just listen to this maths. We do have some hangover selling from 2022, which has sort of had Bitcoin sit in this like 40,000 range, and it's 44,557 right now. But what we're seeing is as this hangover selling releases, the demand and the natural demand of Bitcoin is the mining, and about 785 Bitcoin are mined every day, let's just say. And when the halving happens, that will only be 385. Now, the numbers I just said are 12,700 Bitcoin worth of demand, and that will go to 385 worth of supply. So we think it'll be a big event in the market, and the setup for that is looking very bullish for the year. And we do think that Bitcoin will test new highs, which will help our funds, both funds, to outperform. And then what I wanted to point out around that is what we measured in the sell-off in 2022 of all markets is that Bitcoin underperformed broader markets still by 40%. It was underperformed by about 60% at all-time lows for this cycle. And then crypto underperformed Bitcoin by 57%. So we actually see that both of these gaps can close this year. So that's an opportunity for investors to still achieve great returns, as our funds both have achieved great returns. So big setup, and maybe a birthday present for me. Let's just see. And that is Earth Day too. So we all should remember that, we do at DigitalX advocate responsible Bitcoin, which is 76% of Bitcoin miners use renewable energy, and we would like to see that number grow. And that's an estimate from, I think, PwC or someone like that. But there is a big renewable energy push in the Bitcoin space and ETH.
That's fantastic. You mentioned all right about the third fund that DigitalX have, which is based around real-world asset tokenization, called DART, I think is how you pronounce it. What do you say to critics of real-world asset tokenization, or RWA tokenization, those who consider it just gimmicky and that there's no real demand for it? Or what's your response to that?
Oh, look, I just sort of feel that it's one of those things that is so literally mind-blowing. Once you see it, you can't unsee how powerful this technology is. And at the end of the day, with all the super geeky terms that we use, what we do inside of the DART fund is called atomic investment. And we take data-driven investment algorithms, and AI is like the catchphrase of the world right now. But it's machine learning, it's AI, it's all of those things. It's data-generated investment validation. Whereas when I worked inside of a bank, I'm doing things with piles of paper. Yes, when you trade equities, you've got Bloomberg and DDE links. But what we're talking about is the assets, having a conversation with the money. Therefore, as an investor, I can get the data I need to make those investment decisions in a completely different way. And I can also settle that asset at the same time, which we call atomic settlement. Then if you talk about atomic investment, being able to do all of those things wrapped up into one, it removes so many layers of risk. It makes the process so much faster. So we would say cheaper, smarter, faster. And then you get this really cool thing, which is Caroline was talking about, the ownership of the asset being tokenized, but you can also tokenize the cash flow over the assets. And then you can, in banking, there's a super geeky term called tenor, which is the length of time to which you fund. And you can shorten the tenor of the time that you're funding. And inside a fund, we can generate supernormal returns by increasing the velocity of the financing at a lower risk. And so we believe over time, people will start to see that there are higher returns in these funds, and they're also more defensive. So, we would start to think that the DART fund, which is being launched right now, Digital Asset Reference Token Fund, for those who want to know, and I'll tell you why in a minute, that fund we believe will outperform consistently because the returns are more consistent, and it's much more akin to debt with equity style exposure. And the whole way that portfolios can be constructed then is revolutionized. So what I just talked about is sort of financing and funding formulas and things like that. But Citigroup wrote a report in 2018, so it's quite old now, that this is a financial revolution because of the way investors can construct portfolios. So Steve was talking about university students before. We do a lot of work on portfolio construction and education around how you can change the way you build a portfolio from the bottom up and the top down. And that is the type of thing that, Steve was exactly right. That education needs to happen. And what you'll see is reports being written about it. And right now we're working with Mason Stevens' organisation called F3 with the University of New South Wales, and really researching this so that there's solid grounding behind this capital velocity, atomic returns, and the rest. And just think about how explosive an atomic bomb is. That's the type of explosive returns that real-world asset tokenisation will bring.
Yeah, Lisa, if you could summarise for us, and just to finish, we've got a couple of minutes left on the program. Just give us a rundown of what you think the future holds in this space, and a bit about what we've spoken about today.
Yeah, look, none of us sort of have our heads buried in the sand. There's a lot of work that needs to be done. And, you look at the performance of our funds, and literally that comes from really hard work. And we've got a really hardworking, great team at DigitalX. We all roll up our sleeves. We're a small business. We're listed. We're also the only listed Australian company with Bitcoin on our balance sheet. So you can get exposure to us that way as well. But it's just hard work. And then what I was talking about with real-world asset tokenisation and the naysayers, we've got to reconcile, and then we've got to prove that those returns exist and that all of this can and will happen. So last year we called 2023 the year of real world asset tokenisation, and 2024 we're calling the year of scaling up, and that involves education, engagement. Steve talked about regulation. And then performance has to back up those words, and then we need the evidence to prove that we are, what we say on the box. And I think that's where the industry needs to do the work. But we're super excited, and I'm excited for our whole industry. I think there's so much work going on that will come to the surface beyond, what people can imagine. I think nobody imagined how strong 2023 would be. No one, I think, in our business imagined we would be number one in Australia. And I think 2024 will surprise everybody on the upside as well.
Very well said by you. Lisa, thank you so much for joining us on the program, highlighting a little bit more about what is going on out there. Great times ahead.
Thank you.
All right, that's the program for now. We will, of course, be back. Caroline, there was a lot of information in there. Some dense stuff. I like the atomic energy that she brought to the program as well. Anything else you want to finish on before we go?
No, not at all, other than I think I would echo so much around the themes that Lisa spoke about, and the excitement around tokenisation cannot be undermined.
Yeah.
It's very exciting. All
right, stay tuned here on Ticker for more. We look forward to seeing you again very soon. Be well.
You're watching Ticker. We'll have more in just a few minutes.